I am as positive as I have ever been, ever, that gold is being rewoven into the system because we are not trusted anymore. We are not trusted in any respect the way we used to be. We're not trusted. Our institutions aren't trusted. Our judicial system isn't trusted. Our government isn't trusted. Our markets aren't trusted. You look at four glitches on the LBMA, on the COMEX since Thanksgiving. 2 up, 2 down. Circuit breakers break, overheating, all a bunch of nonsense. The bottom line is this is why central banks are buying gold at a record pace. All of the cliches, gold is not someone else's liability, no counterparty risk, but they're true. And the game is changing because of deliveries. And a system that lacks trust, that wants to use bilateral trade to not use the dollar anymore, means they don't need to hold as many dollars, meaning they don't need to hold as many treasuries.
The global financial system is undergoing a fundamental transformation as gold is systematically rewoven into the architecture of international trade. This transition is driven by a profound erosion of trust in traditional Western institutions, including judicial and governmental systems that were once considered the bedrock of global stability. As institutional reliability continues to wane, the world is moving away from a dollar-centric model and returning to a system where gold serves as a neutral, trusted asset for bilateral trade and settlement. Andy Schectman, the president and founder of Miles Franklin Precious Metals, observes that central banks are currently purchasing physical bullion at a record-breaking pace. This trend is further supported by the persistent and massive delivery demands on exchanges like the COMEX, where participants are increasingly standing for physical delivery rather than settling for paper contracts. In a landscape characterized by systemic nonsense and failing backstops, the movement toward gold represents a strategic flight toward assets that carry zero counterparty risk. Now, we present the clips from his interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
You know, the deliveries have continued unabated, and again, and that to me is really all you need to know. I mean, we could do a show every month, once a month, and just talk about the amount of deliveries. Now, I'm being facetious, but in context, deliveries never really happened. Less than 1% of contracts stood for delivery. And that's really the thing that people need to understand is that, you know, when they say what's different this time, that's what's different. What could break the cartel? That's what breaks the cartel. You know, Bernie Madoff ran a great shop until people asked for their money back. And when you talk about the amount of deliveries, they're not insignificant whatsoever. Looking back at the March delivery, there were 14,559 gold contracts. That's 1,455,900 ounces of gold delivered in the month of March. In silver, 9,212 COMEX contracts delivered. That is 46,060,000. And one of the things that Ed Steer does that I like, he talks about the deliveries that are on the first day, right? And when you talk about first day deliveries for the March contract, the first day deliveries were 2,604 gold and 6,214 silver. So 2,604 ended up being 14,559 by the end of the month, which is really unusual. And 6,214 silver, 6,214 silver ended up being 14,559. Now, it's very unusual, I think, to see the number of contracts added as the month progresses. And, you know, it's up 5-6 times. That's unusual because normally the first day of delivery, those that are going to stand for delivery do so. Now, when you do it later in the month, it's not as obvious, I guess, is the way that I would look at it. The first day notice for April deliveries, remember, first day notice, considering that in just about every month we've seen the first day notice is much smaller than what we see by the end. A big first day notice in gold, 10,138 contracts. That's 1,013,800 ounces of gold delivered, and 1,181 silver, which is 5,905,000 contracts were delivered the first day. That is a very big deal done again. And to me, it's from a standpoint of gold and silver, it encapsulates everything that you and I have talked about since 2020, when you were the first person that I really hammered home what I was noticing in 2020 then as the deliveries, as being way different than anything we'd ever seen. And it's a trend that I was fortunate enough, I guess, or lucky enough to stumble on and grab onto it and watch it, because that to me is the difference. And I think people need to understand that the reserve status for the United States is all about trust. It's built on one thing and one thing only, above all else. When we closed the gold window in 71, it's trust. And trust in institutions, trust in country, trust in the shipping lanes, trust in the country being not only neutral, but the stabilizer of the system. And this is how we took over for the pound sterling. We had the balance sheet, we had the gold, we had the military, we were trusted. We were on a moral high ground then. Greatest generation ever. I was a young kid starting in this industry, talking to people your grandfather's age, Dunnigan, and they were amazing people, an amazing generation. The question that I have really been thinking, the middle of the night when I can't sleep, is what happens when the same trust that built this country erodes, and you see it everywhere. We've seen this trust, and I have been. It's kind of weird sometimes. I think you own a metals company, and you sit up and for several years now you've been speaking about things that are structural in the sense of moral, social, liberal distortions that have changed really the trust in this country from every perspective. It's not just the dollar being weaponized. It's not just foreign reserves being frozen. It's whether or not our allies feel that our guarantees are still real, and guarantees of patrolling the shipping lanes and making sure everyone is safe. You look at what happened in Afghanistan. We made a big deal about that too. That the trust has been chipped away at. It's been eroded.
The mechanics of the precious metals market are revealing a significant disconnect between paper spot prices and physical reality. Deliveries of physical gold and silver on major exchanges have continued unabated for over 16 straight months. This persistent drain of physical inventory is a critical signal often ignored by mainstream financial outlets, yet it represents the most authentic indicator of true market demand. These massive physical outflows occur against a backdrop of deep structural shifts in the social and moral fabric of the country, which have fundamentally altered institutional trust. As distortions in the financial system continue to manifest through erratic circuit breaker activity and nonsense on paper exchanges, the move toward hard asset settlement becomes a necessity for stability. This acceleration toward physical delivery highlights a global strategic pivot toward assets that exist outside of a decaying debt-based architecture. Let's get back to the interview.
I don't think that the dollar disappears immediately, Dunnigan, but I think it is beginning. The world is preparing for a system that is not all about the dollar. And we've been right. You and I talking about this, we've focused on it being a fragmented system, right? A system that is not unipolar, but multi, where systems of local currencies, bilateral trade, settling in the one neutral reserve asset, gold. Why do you think central banks have been buying it hand over fist? Maybe they saw this coming long before we did, and we just I saw the gold being vacuumed up by new entities on COMEX that were given a new identification, the others. Remember in 2020, the others? Who the hell are the others? Sovereign wealth funds. But now we've seen openly the central banks doing it. We're seeing it happen here. Countries are openly signing up to cross-border payment systems like the SIPs or the Embridge, and they're both operational, using local currencies, bilateral currencies, and settling the one neutral asset by which everything is measured in gold. There is no coincidence that this is happening, and Jim Sinclair was right. He was right. You stand for delivery, you win. But we probably don't have the power to do this. We certainly can add on to it now. We can be the icing on top of the cake. When central banks and people at this level are taking millions of ounces every month, and it's completely dismissed and ignored by the mainstream, missed altogether, I am as positive as I have ever been that gold is being rewoven into the system because we are not trusted anymore. We are not trusted in any respect the way we used to be. We're not trusted. Our institutions aren't trusted. Our judicial system isn't trusted. Our government isn't trusted. Our markets aren't trusted. You look at four glitches on the LBMA, on the COMEX since Thanksgiving. 2 up, 2 down. Circuit breakers break, overheating, all a bunch of nonsense. You look at 2 glitches on the LME, the London Metals Exchange, which ironically is owned by the Chinese. But yet glitches that aren't glitches. They are... We're supposed to believe it, just like we're supposed to believe the night before Jeffrey Epstein passed away, his cellmate was moved out, the guards fell asleep, and the cameras didn't work. They're lying to us in our face openly. And I think the bottom line is this is why central banks are buying gold at a record pace. All of the cliches, gold is not someone else's liability, no counterparty risk, but they're true. And the game is changing because of deliveries. And a system that lacks trust, that wants to use bilateral trade to not use the dollar anymore, means they don't need to hold as many dollars, meaning they don't need to hold as many treasuries. This is where the problem starts to happen. We're massively in debt. The world doesn't want our treasuries anymore. Our fiscal irresponsibility and the lack of trust is getting to a point where if you hold in dollars and you don't see this, it'll be the biggest mistake you've ever made. You do not buy gold to get wealthy. You buy gold because it is wealth. And it has never been more obvious, if you're looking, that the people who make the rules are agreeing with that statement. And price is the greatest tool of misdirection. I've said that a million times, but it is betrayed by the deliveries. Period. End of story. Drop the mic. The deliveries that do not stop should be all you all need to see. Because at this level, at billions of dollars every month, these people do not screw around. And the fact that they are being covered in a cloak of journalistic nonsense where nobody in the mainstream will talk about who's standing for delivery every month. For 16, 17 straight months, and it is not stopping. And here we are, the first day of delivery. What did I say? First day of delivery, and we are at 1 million ounces of gold and 5 million, almost 6 million ounces of silver. And if this is the case, if I'm right, which in my gut, I know I am, maybe this is why the dollar's dropped to a 31-year low this month. In terms of foreign reserve assets held by other central banks. So
the era of a unipolar dollar-dominated global economy is beginning to fragment, making way for a multipolar system where gold serves as the ultimate neutral reserve asset. This structural realignment is driven by a profound erosion of trust in Western judicial and governmental institutions, which has fundamentally altered the architecture of international trade. Central banks are currently leading this transition by purchasing physical bullion at record-breaking levels, signaling a strategic retreat from debt-based fiat units. As bilateral trade agreements increasingly move toward hard asset settlement, the world is preparing for a fragmented system where physical possession is the only reliable form of security. The relentless drain of physical metal on exchanges like the COMEX, now continuing unabated for over 17 straight months, highlights a critical disconnect between suppressed paper prices and authentic physical demand. While mainstream financial media often covers these developments in a cloak of journalistic nonsense, the reality of participants standing for delivery every month confirms that the global shift toward gold is accelerating. As the U.S. national debt surpasses $39 trillion, physical bullion is being rewoven into the systemic bedrock of trade. For those seeking stability, the path forward requires moving outside of decaying paper ledgers and into physical assets that carry zero counterparty risk. Share your thoughts in the comments section below. If you found this market analysis valuable, please support the channel by liking this video and subscribing to more exclusive precious metals content. Thanks for watching.